Let's check in on the markets now. Joining us from CommSec is Tom Piotrowski. Tom, good morning. How did the markets fare overnight?
They did quite well, Danica. We've got the US markets up with a comfortable improvement as we speak right now. The S&P 500, the broader market, is up by around 0.5%. The Nasdaq has done what it's tended to do over the course of recent session, and that's outperform its peers. Technology stocks doing a little better with that index up by around 0.75%. But importantly, the markets have threaded the needle on the December reading of US inflation. So the most important measure, arguably, is what we call the core underlying measure of inflation, and that moderated from 6% to 5.7%. So that was in line with expectations. But in the bigger picture, the trend for inflation has continued to moderate. This is the lowest reading in more than a year. It's the sixth consecutive decline for US inflation, having peaked at just over 9% in June of last year. So the markets have taken quite a deal of comfort from this. We've seen both long and short-term interest rates fall considerably on the back of this news. They were already expecting good news, Danica, but we've seen bond yields fall by about 10 basis points where 2- and 10-year Treasury notes are concerned. That has come as some comfort to the market. So the question now is whether or not the US Federal Reserve will continue to hike rates aggressively. The markets are betting that they won't, but the US Fed officials that have been speaking most recently still hold that we could potentially see a 0.5 point rate hike, but the markets at this stage are pricing in 0.25. So the local SPI futures are doing pretty well at the moment. They're up by about just under 0.5%. So we'll kick off well in positive territory this morning in local terms.
Tom, thank you.